Okay, now that we've been over a bunch of the basics in the previous video, this video will actually be talking about the actual trading strategy. So what we'll do is we'll start by drawing in a few of the lines, just showing highs and lows of different swings. So if we start right at the start, the second one in we can see is an up candle, then it goes down, so we'll go down, then it goes sideways and then up. So that was the bottom of that move. That was up, sideways, up, up, down. So it went up to there, then the price came down, then it went up, so it went up, up, a sideways down, so that was the top of that move, then down. I'll just quickly do these. That was all sideways, so that can go down to there, and then that was all up until this down candle, so that was the peak there. Then the price came down to this low point, then the price came up to that point, then down, up, down, up, all side, no up candles there, so that was, there's an up candle, so there to there to there, sideways up to there, that's all down to there, then up to there, down, up to there, then down to there. So all I'm doing is just linking together all the up candles, including the sideways candles, and then all the down candles, including the sideways candles. So if we look at just this lot here, just these here that we're up to, so we can see that this is this is a sideways candle, then it goes down, then it goes sideways, then it goes down, then it goes down, then it goes sideways, then it goes sideways, then it goes down, then it goes sideways, then it goes up. So all of this is all either sideways or down, and that's our first up candle. So we can draw a line from there down to the bottom of that, the lowest point of that move. And that's all I've done so far for all of this, is just linking together all the either up moves or down moves until we get a candle in the opposite direction. Okay, so this is enough information for us to start with. Actually, I might just finish the chart. This is where the market is currently up to. So it'd be interesting to see how many trades are actually on this entire chart. And we're currently looking at 1 hour charts. This is a 1 hour chart, so every candle is 1 hour. So on here is days and days and days, or weeks of trading. Okay, so down to here, I'll just quickly do the rest. Then it goes sideways up. That's the highest point for the down, so there to there. Then all this is sideways to up, then down, but this one's higher than this one, so that was the peak of the movement. Then it goes down, 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 sideways. There's our first little up, so down to there, then up, then down, then up, down, up. So this one looks like it comes down, then up, then down, but it doesn't. It actually goes down, so starting from here, so down, down, sideways, 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 down, sideways, sideways, up. So all of this is one down movement to there, then it moved up to there, then down. That was, this red candle's an up, so that's the low, then that's the high, then no up candles and all of that. That's the lowest point, and then it comes up to here, in there, then it goes up, sideways up, up. That's ever so slightly down, so we'll do that to that, then up to here before it moves down to there. Then we've got another up candle, then down, then up to this highest point. No up candles and all of that. So down, so this little blue one's an up, so that's the lowest point, that's the highest point. This little one's a down, and then there, then we've got up candles taking us to there, then down, this is an up candle, then down, that's sideways, that's up, then down to there, then up, down, there's a little up. Now that is down, then that's sideways and that's up, so that's the lowest point there. Up, down, and then we haven't quite got our next turn, so we don't know if this is going to continue going higher or go lower. But that's the entire chart that we can see with all our ups and down movements on it. So the trading strategy is, if we just zoom in, go back to the very start. This is the start there. I might just make that bigger. So this first movement here, we could see the price went up, then came down, then it went higher, made a new high. So that, this candle here breaking a new high, tells us that this low here is a significant area for us. If the price goes lower than this circle by 10 pips, and the way we do that is we can just measure down, so that a little 11, out of all these numbers, the very last one, which is 11, that's 11 pips, that's 10.5, that's 8.9, 10.9, so about there, which is about there. So when the price came up and broke this high, this became our significant point of interest, where if the price goes below this point by 10 pips, then we want to enter a sell trade. So on this red candle here, it hit our entry. So that is our entry for a sell, right there. Actually, what I'll do is put an arrow in there to say entry, and I'll make it a down arrow to show that this was the candle where we entered our sell. And it was at that point, at that price. Cool. Now, then the price came down to this point, then moved up to this point, and because it moved up, leaving this point here as our low, that was our low, and then it moved up to here. When the price comes down and breaks our low, which is that point there, that's when our low was broken, that's when we move our stop loss down to just above the most recent high, which is this one. So our stop loss goes 10 pips above that. I'll make this line red, and that can be our stop loss. We don't need these other ones here now. I'm just trying to make it less confusing with all this other info. Okay, so the price from our entry, which was this part here, we got into a down trade where that yellow circle is. So I might even just make that green to say our go signal. So that was it there. Then the price came down, made this low, came up, then broke our low. As soon as it breaks the low, we move our stop loss 10 pips above this high, the previous high. So if we just measure 10, that is 10.9, 10.4, 9.9, about there, so just above from the circle. That would be our stop loss. So far, we entered our trade here, and we've locked in that amount of profit in that little green box. So that is our current profit box. Then the price comes up, doesn't break our stop loss, and it comes down and doesn't break our previous low. But then the price comes up and then does break this low. So let me just go through that again. So the price comes down to this point, comes up, makes a high, then the price comes down and breaks the previous low. And as soon as it hits that price there, matching the previous low, that's when we bring our stop loss down to 10 pips above the previous high. So actually I'll just move the screen so that's all we can see. There we go. So we moved our stop loss down because the previous low has been broken. Then the price comes down and makes an up candle. Because it's now it's made an up candle, we know that this was the previous low. So that when this price here is broken, if the price comes down lower than this, then we'd move our stop loss down to 10 pips above the previous high, which would then be this one. So if we go forward, it comes down but doesn't break it, which means we just don't do anything. Then the price comes up, and then the price comes down, to this one, still hasn't broken it. Then the price comes down and breaks it. So at this point, at this price here, once that's broken, we then move our stop loss to 10 pips above the previous high, which was this one. The most recent high. So it's this one, which is the most recent high. And so it's 10 pips above that, so we can measure that out. So that's 8.7, 9.5, 10.3, so it's around that price. About there. So that's how much profit we've locked in so far. Then the price comes down further, down further, down further. Now it's made an up candle, which means we've now got a new low. So now this is our point of interest low. And if the price breaks this low, we then move our stop loss down. So the price comes up, up, down, 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 down. It still hasn't broken it. There, it's broken it. So we measure our previous high, which in this case was here, and we go 10 pips above that, which is about there. So that is where we move our stop loss to. So now we've locked in this much profit. So even if the price comes up now, we're going to exit at this point. That's what the stop loss means. It's basically, if the price comes up and hits this price, we exit the trade. But because we entered up here, we've locked in all this profit. So even though the price has come down to this point, we're not exiting at that point. We just stay in the trade. And if the price comes back up and hits our stop loss, we exit the trade. And yeah, so that's what's happening with all of this. It's like, you call it a trailing stop loss. So as the price just keeps moving, we just keep locking in more profit. So we'll see if we get more profit out of this. So the price comes up. And because the price has made this blue candle an up candle, so that means we know that this is the new low. So what we'll do is we'll move this as our new point of interest. So it's there. If the price comes down and breaks that point, we move our stop loss down. So there, it's just broken it. So this is our new point of interest. It's our new most recent high. So we move our stop loss down 10 pips above it. Let's just measure that out. So 11, 9.5, just a little bit above where it was. So there, that's about where our stop loss goes, which means we've locked in all of this green profit. So That can sit there. Then, if the price hits our stop loss, we exit the trade. If the price comes lower, we then move our stop loss down. So we'll see what happened. It came very, very close. It might have touched it there. It definitely touched it there. So we've exited the trade. Now, we can measure the top of this green box to the bottom, and we can see that that trade was worth 119 pips. So that, we'll just put a little box there with 119 in it. So that was a profit of 119. Now, the price has gone up. It's now, according to our trading system, it's now a buy trade. There is it's not 100% let's get into the trade, because we do the same trading strategy on the 4-hour chart, and we only enter a buy trade if the 4-hour chart also tells us it's a buy trade. So in this case, this is the 4-hour chart here. So if we do the same thing on that, we'll just say, okay, so the price came down to here. That's our first up candle, so that was the low point. There, then down to there, then up to there, then so down to there, up to there. That's all down. Then we've got up. That's a down, so that's the low. And that's the high. So that candle, that one candle was the low and the high of that move, which is uncommon, but it does happen occasionally. Price comes down to there, there, and up to there, then down to there, and that's all sideways. So we haven't got a finish yet. So let's see if in the same time frame, over the same period of time, but looking at a 4-hour chart, let's see how this would have played out. So we had the uptrend happening here. So the price came, where was our high? So that is, we have no down candles there. So that's up, sideways, 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 up, up, sideways, sideways, up, sideways, up, and then down. Okay, so we never actually got a little down movement here, which means all of that is one push up from this point. So that was all one push up. So once the market breaks that point, that's when we're actually in a sell. And then from there, the price comes up, down. Let's just quickly. So when the price, this is our most recent low at this point, and our stop loss would be 10 pips above our most recent high, which is that one. So an easy way to do it is if we just put a line just above that, we know that if the price breaks here, breaks this point, then we can bring our stop loss to just above the most recent high. So price comes down, wiggles around, and then breaks it. So we can bring our stop loss just above here. Then the price comes down, up, comes extremely close. We'll just measure that out to see if it was 10 pips or not. No, that candle only went about 7 pips. So the stop loss is just above it. And so we're still in a down trade from here. As it wiggles around and then breaks this low here, which means we now move our stop loss to 10 pips above the most recent high, which is this one. And then if the price breaks here, we'd move our stop loss down. So this is our current point of interest. And because that's our current point of interest, the most recent high previous to this is here. And that tells us that that is where our stop loss goes, 10 pips above the most recent high. So if the price comes lower, then we know what the most recent high is based on where it broke. And if it keeps going up, then we know we're in an up trade. But if this just goes zigzagging sideways, we don't need to enter or exit any trade. It can just zigzag all at once. It's only when it goes lower that we are paying attention to it. So at this point, on the 4-hour chart, we are in a sell trade, which means on the 1-hour chart, we don't take this buy signal because the 4-hour chart is telling us it's still a sell signal. So it's given us an exit to this original trade that we were looking at. It gave us a buy, or it's a buy and it's also an exit. So we got out of the trade. Now, if the price comes down and breaks the most recent low by 10 pips, we get into another sell trade. So that's our most recent high, and that's our most recent low. So let's see, there we go. So the price came lower. Let's see if it came 10 pips lower. 910, it did. So now we are in a new trade. That is our entry signal to get into a sell trade. And this is our most recent high. So our stop loss goes 10 pips above it. 8, 9, 10, so that's about there. That is, let me see if I can, I'll just move this arrow down to say that that's our new entry. And that's our entry spot. So the price comes down to this point. So that is our most recent low. And if the price comes up and goes up and hits our stop loss, we exit the trade. If the price comes down lower, then we would move our stop loss down. So we'll see what happens. So it's zigzagging, but it hasn't broken low and it hasn't had our stop loss. So we just leave it. Nothing's happening, 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 nothing's happening. Now it's broken our point of interest. We'll call that it's our most recent low that we moved our target to, and now it's hit it. So what we do, just like before, we move our stop loss to our most recent high, which is this one here, and we move the stop loss 10 pips above that. So that's 5.5, that's 7, that's 8, that's 10. So it's about there. About there. So that's where our stop loss is. And when this turns around, there we go. So we've actually got two inside candles. There, we've got our first up candle, which is here. And because it's an up candle, we then know that this point here is our low. So if the price comes down and breaks our low, we move our stop loss down to 10 pips above our most recent high. So let's see what happened. Price came down and then up. Now it's broken it. So where is our most recent high? There. So at the point our low was broken, this is our most recent high. Then we measure 10 pips above it, which is there. So that's where our stop loss goes. So we're now actually in profit. So after all of this time, we only just got in profit there. So it's taken a long time for this trade to do anything that's locked in any profit, but it now has. So we'll just keep going. Price comes down, 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 Now it's made an up candle. So we know that that is our new low. So we can move our point of interest to there. And we've still got the same high because we haven't broken a new low. So our stop loss doesn't move. We just wait to see what happens. Price comes up, getting close to our stop loss. Now it's hit our stop loss, so we exit the trade. And our 4 hour was still in a sell signal, so we're not looking to buy. We're now looking to see if we get another entry for a sell. So we do the exact same analysis in reverse. So the price comes up, then down, then up, but doesn't quite break it. Doesn't quite break this high. Actually, I'll use that as our high. And here it does. On this big blue candle, it's broken our high. So we move our which is now our entry, move our entry to 10 pips below our most recent low, because we're looking at everything in reverse now. So 10 pips down is 0.910, it's about there somewhere, about there. So if the price comes down and hits this red line, we then get into another sell trade. Oh, sorry, that was a new candle forming. Okay, so price comes up, then down. If the price comes up and breaks this high, we would move our entry for a sell signal higher. Let's see what happens. Price comes up, down, up. Ooh, okay, now it's definitely broken it. So our most recent low was actually lower than what we had. So this is our most recent low. And this is the point that was broken. So this blue candle broke our recent high. We didn't quite get into a trade. And price comes up. And then down. And if this new high is broken, we then move our entry. But if the price hits this red line, it means we're entering a sell trade. Let me just check if that's not 10 pips away. There, so about there. So when the price comes down, if it goes down, now that was the price that we entered the trade. That price there. Let me just do that. So that's another trade. And our most recent high was this one, which means our stop loss goes 10 pips above it. 10 pips above that, which is about where it is. And now the price has come down and then made a high. Gone. It's made an up candle. So this is our new point of interest, our new low. And what I'll do is I'll just quickly bring over another one of these candles to say that that was our entry for a sell trade. And so the price comes up, but doesn't hit our stop loss, just comes up and then makes a new low. It breaks our previous low. So now we look at where our previous high was, measure 10 pips above it, which is about there somewhere, and we just keep going. So price goes down, up. Oh, this down movement here actually went down, down, sideways, sideways, up, and this was the lowest point. So I made that little mistake at the start when I was drawing this out. So the price has come up and then broken it. So that was our point our recent lowest point and it's been broken. So once that happens, we move our stop loss 10 pips above our most recent high. You might see a theme happening here. Every time it happens, we do the same thing. That's the cool thing about this strategy, is it's the same thing over and over and over again. There's very little to it. And we've also just moved our stop loss lower than our entry. So just for fun, we can draw in the fact we've locked in some profit. Now we'll keep going. So the price comes down. It made an up candle. This blue one here is our first up candle, which means this is our new low. And if the price breaks this low, we then move our stop loss to the most recent high. So we'll see what happens. Now it's hit our stop loss. So it didn't come down and make a new low. What it did is come up and hit our stop loss. So that is an exit of the trade, which exited right there. So our profit on, actually, let's just quickly draw our profit on all of these. So we've got 20 pips on that one. And we've got, I'm guessing just a little bit less than 20 on this one, probably like 15 or something. So 15.2. Just call it 15. And now, that's it. We're currently just at the point that we are. So this is where the market's currently at. So on this whole chart, from where we started drawing all the way down, we had 3 trades and they were all successful. So it's quite a cool trading strategy. It's very simple and it seems profitable. So the more I've tested it, the more I can see that it just keeps working, which is fantastic. So yeah, that's it. Sing out if you have any questions.